Let's start things off with First Solar. The solar space is getting a lot of attention these days, and this morning for sure. Janney downgraded Sunrun to neutral and lowered their target price to $13 a share from $20, citing uncertainty about demand after its report. Demand will also be a key factor to watch in First Solar's report, according to Roth MKM. The firm also keeping an eye on falling prices and oversupply. Ari, what's the trade here?
Well, that's such a great point right off the bat. The weakness across the board, Sunrun, Enphase, First Solar. First Solar, actually one of the few that had worked during the initial stages of the bull market in 2022. Now that's rolled over as well. So you have that top-down pressure. Here's a stock that initially broke down last September. And here are the rules. Prior to that, it was trading above a rising 200-day average. When that's the case, you want to buy pullbacks. Now it's trading below a falling 200-day average of the rules. You want to sell strength. So I don't know how it's going to respond directly after reporting earnings, but if you get a pop in the stock, you want to sell it into that 200-day average at around 171 in a strong market tape, one of the few stocks in a downtrend as it stands.
All right, so the charts are right there behind you right now. You can kind of see those for First Solar and that downtrend line for the long-term 200-day. Next up, you got Lemonade. Shares of the digital insurance name are up nearly 37% over the past year. Your colleagues at Oppenheimer, Ari, are saying positive, and it's on its expansion in Europe and a hopeful return to normal weather patterns this year. All of that factors into insurance. You're watching Lemonade's technicals. You also see an opportunity, not just from the fundamental, but the technical side as well.
That's right. Confirming disciplines here at Oppenheimer. One where you see the chart starting to reverse higher. It's part of this expansion in small caps that we're starting to see, or at least the bull market starting to broaden out a bit. A stock that is reversing the prior downtrend. You see it in the slope of its 200-day average, which has really just started to take a positive tilt year to date. It's been up the last couple days, I think up maybe 7% today. Maybe tough to chase it into earnings, but if you get a little bit of a pullback into around $28, $19 or so, I think you buy it. I think there's a runway into the last peak from July at $25, which is $4 of upside from here.
All right, we're showing that chart right now with that longer-term 200-day as well there. Finally, we want to call your attention to Squarespace. Those shares are higher today and up a little more than 3% so far this year. Mizuho has got a neutral rating on the stock, seeing several potential growth drivers going forward, including the launch of Squarespace Payments. But it's worried about the near-term upside as price increase tailwinds abate. Ari, you're a buyer, though, of Squarespace with these charts.
This is a great-looking chart, Dom. I think the setup here is, here's a small cap growth name. I think at this point in the cycle, small cap growth just carries a great balance between secular growth leadership and the rotation potential that we see developing in smaller capitalized stocks. So you got a name like Squarespace, which has run right into resistance at $34. It hasn't been able to push through just yet, but I think with a bullish trend behind it, with this top-down strength from a strong tech sector, I think you get that breakout to the upside. It would measure north of $40 on that breakout. So pretty attractive setup how we see it.